They made more than $20 million of revenue, the protocol itself, because the protocol was taking 5% of the transaction fee. So that goes straight to the company behind Friend.Tech in this case. That's a lot of money, $20 million of that. And there was a lot of trading volume over time.
Is Friend.Tech on the brink of recovery, or have we witnessed the end of its journey? What does this mean for the future of SocialFi as a whole? Let's explore these questions in today's video. Before we dive in, make sure to like and subscribe to the channel to stay updated on the latest in Web3. Your support helps more people find this content. Quick note, my insights here are entirely independent of my professional role in Web3 security, but because I work in Web3 security, I am able to provide you insights that you won't get anywhere else. Also, if you're a builder in the Web3 space, join our thriving community at networkspotlight.io. It's a great place to connect, share ideas, and grow. Sign up is free. All you need to do is just connect with me on Telegram. You can do so by filling this form out here, and we'll connect. Now, let's start with a quick overview of Friend.Tech.
When you are active on social media, as a user, a consumer, you don't get paid. You have zero revenue, even though it's what, like several billion people on average spend more than 5 hours a day on social media. Like it's crazy numbers. It's just as big or bigger than gaming itself. So in terms of amount of time spent and in terms of sheer number of users. So if anybody can make a decentralized version of a social media app that is successful, you could have users that get paid for the time that they spent and the activity that they performed. When you're active, let's say on Facebook, the stuff that you like and the stuff that you look at is powering the recommendation engine. And that helps other users filter their content so that they can find things that are relevant to them. So as a user that spends 5 hours a day, you're filtering content and basically labeling content for other users that fit kind of your pattern of interest in a sense. But you don't get paid for that. It's all captured by Facebook in this case. So Friend.Tech, this is what they were trying to solve. Let's say that you have a social media influencer that is big on social media. You can go on Friend.Tech and you can buy their keys. And that gives you access to the private chat room of that influencer so that you can interact with them. But at the same time, that influencer can produce content that is valuable to you in the chat room that is private. But people were not really that concerned about the private chat room that much. What was interesting is that if you have a social media influencer that has 1 million followers on, let's say, TikTok or Twitter or whatever, chances are there will be a lot of other people who buy the key. If you're early to buy the key, the key price will increase exponentially as more people buy the key after you. And that was extremely speculative. And the first week that I tried Friend.Tech, I doubled my money in 1 week.
So the speculative aspect of the model created a lot of buzz around Friend.Tech, but Patrick did mention that the usage has dwindled tremendously. Should we now discount Friend.Tech and SocialFi altogether?
And as you can see, there was September and August, there was 2 massive spike of use, but the trend has kind of died down. They were collecting more protocol fee per day than Uniswap at some point in time, which is insane for a project that was just less than a month old, like a few weeks old. So to me, that demonstrates that there's a real use case there. There was less than 1 million users overall that are unique. Yes, 72,000. So imagine that you could scale that to 10 million people or to even 1 billion people. The value of this is just incredibly high. And compared to GameFi, a quality game that can attract hundreds of millions of users, gamers, needs to be a AAA game. And that costs 50 millions, maybe 100 million to develop and take years. SocialFi cost a fraction of that. So this is why this was an industry that was really interesting to me.
With 20 million in revenue from just 72,000 users, the upside for SocialFi apps seems insane. In comparison to GameFi, SocialFi appears to have lower development costs with higher return potential. But what about the competition? Who are the key players challenging Friend.Tech?
And as you can see, Friend.Tech had the majority of the transaction volume. And StarArena actually got pretty big on the 10th of October, 6th of October. That's when it peaked. But since then, there's barely any market share anymore. So all of the market share right now is on Friend.Tech. But even then, Friend.Tech, the volume has decreased so much that I think the entire industry has kind of collapsed at this point. And I look forward to the day that we see one project emerge and making a lot of leeway in a way that will last. Because I think if we manage to bring 1 billion people here, social media as we know it will be completely changed in a way that is for the best, because all of the community members could financially benefit from the value capture.
So this is very similar to what meme coins have gone through, where they make millions of dollars and then they have two options. They can either buy their Lambos or reinvest it back into the project. As we've seen with Shiba Inu, they built Shibarium because they want to reinvest back into the project. So not all meme coins are trying to just fill their pockets. Some are actually building. So in the case of Friend.Tech, in the case of these other applications mentioned, let's just hope that they will take a very similar approach, not get greedy, and want to continue to build. That's a wrap on today's discussion about Friend.Tech and the broader SocialFi landscape. What are your thoughts? Do you see a resurgence on the horizon, or is this the end? Share your opinions in the comments below. Stay tuned for more insights, and I'll catch you in the next video.